Okay.
That's good. Now, this was that Aussie dollar daily trade from yesterday. I entered it. I posted a picture and everything of what happened. And that first trade that was entered was stopped out. I don't know if anybody followed it or not. Uh, and it was stopped out with 55 pips. I posted the picture yesterday. I posted the picture, posted the setup, the whole 9 yards, and never hit the send button to put the order in. You got me?
That was the
That's what.
luckiest thing you ever did.
That you're fired.
What's that?
You're fired.
Yeah, I know, I know. Um, so what happened was when I came back to the computer, the price was already above my entry. And in fact, let me just pull the entry up in here. See, it was 55 pips. And there was my entry. That was my take profit. And you see this candle came back. Now, someone mentioned that there was news coming out, and I think Aussie News. But I had already set the trade up. And as you know, when I set up a trade, I honor it. I try not to run and back out and all that. So I really don't know if this was a new spike down to here. Okay. But this morning, when I came back to the computer, uh, the trade parameters were still there. This candle, current candle, was a bit lower than it is now, and I reset the entry again right above the high of this candle because now we have three taps at the 100 level, at the 00 level, I should say.
Yeah.
So this time I put in my pending order. Where are we wrong? This time I put in my pending order, as you can see. Oh, it kicked in. We got triggered in already. Okay. So we're in the trade again because I still see the parameters that I like, and now we've got a rounded bottom on these spikes. My impetus for entering this trade last night was the fact that we this candle closed higher to it, closed closer to its high than it did to the center. And if you remember, usually when we see those, the next candle heads in that direction. So what happened was last night, as this candle was forming, it went up about 25 pips, came back down. It danced in this area for a while. Make a long story short, then eventually came down, spiked, and went back up again. So I don't know if the spike could have been news because that spike from that distance down was about a 60, 70 pip drop. All right, which would coincide with a sudden news drop. So when I came back to the charts again this morning, everything still looked good. And it's important to remember not to let one uh, trade that doesn't work out, don't let that freeze you. You follow what I'm saying? Don't let it freeze you from taking the next trade. The other thing I did on that other trade was when I entered here, I put my stop here. I took my stop from the bottom and moved it up some more. All right, so I actually had a smaller stop, and it wouldn't have made a difference because the original stop, if you remember, the entry was at 7,400. So, excuse me. Wow. So the uh, this would have been stopped in either case. All right. But again, I'm back at the trade. I see that the same parameters are still there, and I'm going to take another shot at it. Again, I'm doing $1 a pip, and I just need to make sure that my other account is. Hang on a second. I just got to do something on this other screen. Okay, so uh, all the parameters that I see to take a trade long here are still there. So I'm going to give this another shot at it. All right. So now what I want to do is go here, and this is that New Zealand dollar weekly. All right, and we're still looking for a little bit of room to the upside. On the lower time frames, it had a couple of nice moves up. Um, as you can see, but we've got like a triple top here, so I didn't want to chase this beyond this until we break this high. All right, once we break this high, then I'll take a shot a little higher up. But we need to make a new high and have a pullback first on that New Zealand dollar weekly. Oh my grid lines here. What was I looking at? Oh, I wanted to go back to. Let me go back to the daily. And oh shoot. Okay, I may have missed this because from here to here is a nice run back up to this moving average. But let me go back to Aussie CAD. Was that was Aussie dollar, right?
Yeah.
Okay, so let's go back to Aussie dollar, and I want you to look at the. I'm just looking for a couple of double or triple tabs at the 100 level. Like we have a few tags right here at the 100 level. And the indication is eventually this thing took off, as you can see. Here we have 3 tags at the 100 level, and it eventually fell hard. Here we have, well, 2 tags. I'm looking for like 2s and 3s right now. But I just want you to see, here we have 5 tags, 6 tags at this level, and it eventually did give us a 100 pip run from this level, about 150 pip run. So when you have those multiple tags at a level, at a 00, I should say, I'm confident in taking another shot at it. And now we've got a triple here. So I see no reason not to give it a shot. All right, we have a double here. So when you get these 2 tags like that, they're usually pretty good, but you know, you cannot predict what's going to happen. And this could have been a news spike, that 70 pip drop. Could have certainly been a news spike, and someone did warn me about it, but you know, when I place a trade, I honor it, good, bad, or otherwise, and I just let it take its course. Because many times, as I mentioned in the past, I will have a trade set up, I'll get scared and move my stop back further to give it more room to move, or adjust some other parameter of the trade, and a lot of times I ended up hurting myself more than helping myself. So that's why I honor it. If I place the trade in, I honor it. The only thing I didn't do yesterday was hit the damn send button, which I thought was real funny once I realized it.
It was a good job you missed it, though, wasn't it?
Well, yeah, it would have been stopped in either direction, and I think it was Phil was trying to tell me about the news, the Aussie news. But the trade was set up already, so, you know, I just let it go. All right. So that's what we have there. So yesterday we spoke about another simple daily system. I want to get off of a chart that doesn't have a trade on it. Let's go here, and we'll just change this to what's our pair going to be today, gents? Just to get started.
Euro dollar.
All right, let's go euro dollar. That's always in the news. Let's get rid of these. All right, so what we want to do in this particular system, I like these smaller oh wow, look at that gap. I like these smaller candles, and what we want to do is always try to stay in the direction of the 21. All right. Let me roll back and look at a few others so you can see, you know, what we're looking at. Now, you can change this to a slightly faster moving average if you want. In fact, rather than change it, I'll simply add a I'll make this one an 8. I'll add an 8 and make it a different color. This is something you can tweak a bit to suit yourself. Okay. Some people prefer the 21 because it allows them to stay with trades longer. Some people prefer the 8 because it's just closer to price. But the concept here, the idea here is when you have this, this happens to be a particularly good situation here. This is a inside bar, okay? And when you're on a daily, you come back and check at the end of the night. You would now place a pending order right below that bar. Okay. And your stop would go to the top of the prior bar as long as it's not too far out of your money management profile. Got me? Now this is kind of way up there. I'd probably bring it about halfway to the candle and may have been stopped on this. But this is where you would want to put your entry. There are times when you're going to have to wait 2 or 3 days for the trade to kick in, but once it kicks in, you're usually pretty good. Now, there are, if I'm going too fast, just someone let me know. There are two
Hey, I had a
different.
quick question about the pending orders.
Oh, yeah, go ahead. Who's that, Phil?
When you put in a pending order, when you put in a pending order, do I need to have the broker running at all times, or once it's set, can I close my computer off technically and it'll still run?
You know, I always leave my computer on 24/7, so I can't answer that. But I believe you can turn the broker off because the order is on their server then.
Okay.
Yeah, Lou.
Yeah.
Usually, all the orders are limit orders, right? Are on the actual broker server. Usually, it's not on you. It's not running on you.
Yeah, limit and stop orders. Am I correct?
Right.
Yeah.
That's why you can be on vacation, and as soon as it hits your price and you log back in, you find out what your, what your damage or what your reward was. Usually.
Okay.
But I guess you should verify it with the broker, but I'm 99% sure that those are actually market stabilized orders, not local.
Yeah, it sounds right to me.
Yeah, because they should be sitting on the broker's server once you place it.
And that's why you're protected when the market runs away from you, because if you have to rely on your laptop with your web browser and everything else running, your local processing probably wouldn't be able to execute that as fast. So.
One exception to that is the trailing stop on MT4. Your platform has to be active.
Okay.
Will they charge you a hosting fee if basically
Well, MT4 doesn't.
on the cloud? Trade.
You're breaking up, Andre.
Oh, could you hear me?
Yeah, but it's like every third word.
Okay. How do I sound now? Do I still
You're
sound
fine.
choppy?
You're fine now.
Okay. NinjaTrader has that ability where you can have hosting services. I'm not exactly sure about MetaTrader. But for trailing stops, I believe, like you said, you do have to have it on that's your local machine thing.
Okay. Well, that's something to keep in mind then. And it's something I'll double check also, because once we get into like a real decent long-term trade, I will want to use a trailing stop and scale in, which is the next step. Okay, so what we're looking at here, like if we looked at this, yesterday's order would be a pending order below this candle right here. Okay? And now since our stop would go to the high of the prior candle, in this case our prior candle is actually lower, so we put it to the high of the actual signal candle. You follow me? So your pending order would be here. And this would be what kind of order, by the way? So someone asked me something after the session.
A sell stop.
Correct. All right, this would be a sell stop, not a sell limit. Okay, and just briefly for those that if I thought price was going to hit this moving average and turn down, I would put a sell limit here, telling the computer if price touches that line, sell it at that point.
Yeah.
That's a sell limit. All right. A sell stop would be if price gets to this line, sell it at this line with the thought of price moving lower. All right. And then the opposite is, oh, go ahead.
I was going to say, so it doesn't matter to you what color the candle is then?
No.
No. Okay.
All right. Because you do get pullbacks, and I'll give you an example of how that would work. It's kind of similar to the 1889 in that, let's say we put I like this candle. Let's say we put a pending order here, And if the next day you don't get
That's
kicked,
almost an inside bar, that one, isn't it?
well, no, this one isn't.
Yeah, almost.
Yeah, almost, yeah.
Yeah.
But what I like is that it's a moderate-sized candle, and the reason I like the moderate-sized candle is that prices like to get out of this mess. Prices don't like sitting here.
Right.
So now here we have our pending order. I wake up the next day, gee, my short order never got kicked in. I could certainly move the short order up to the next low because it was a higher low, similar to what we do with the 1889.
Yeah.
You got me? Now this is where my pending order is, or I could just wait a couple of days for this one to kick in. You follow me?
Yeah.
Okay, now the reason it's usually better to wait is by the time this price kicks in here, you will have some price action with a few candles that will actually be driving price back in its regular direction. And if you keep in mind that in a downtrend, the first thing that happens is the upper wick. Normally, prices will be far enough away from this point that that upper wick won't come back to hit your stop.
Right. Okay.
You got what I'm saying?
Yeah.
So that's why sometimes it's better to wait. But if you want to be aggressive, or if you have something that looks like a runaway market like this,
Yeah.
you know what I mean? You could be aggressive and go right here.
Right.
All right. Now, in this case, this trade may not have panned out because it looks like this would be your stop here because the prior candle isn't higher than this one.
Yeah. You got stopped out there.
Yeah, you got me? Well, we don't know that, for sure. And that's the tricky part about this because this could have, well, this more than likely opened here and went up and came back. But many times when you look at these candles, you may not realize what happened in price in real time.
Yeah.
You know what I'm saying? So this could have opened here, went down here, came back, went up, and came back again. And all it will do is it'll always leave a wick on either side of the open price.
Yeah.
But I always assume in back testing that this is a trade that didn't work out.
Yeah.
All right?
Lou?
Yeah, Andre.
Is this if you go back to the right side of the chart and you look
over
at
here.
I think it's
Wait. Let me give you control. Let me give you control so we don't go. All right.
Cool. Is this a price trap using this candle as the trap
Yes.
candle and all these guys? So this from here down is a price trap?
Absolutely.
A hell of a big one, mind you.
Yeah. And the stop loss.
Right. So that one. Oh, I'm sorry. What were you saying, Lou?
Yeah. The stop loss on that would be way out of whack for me.
Right. So
But-
that would, even though it is a price trap, it's a price trap that we probably wouldn't want to engage in because it's just the pip spread is just too large.
Right. Now, while you're talking about price traps, as a quick exercise, show me the other two price traps after that one.
Okay. I would say it would be this candle,
Right.
and then that got broke. That.
Just show me the price traps. I'm not too worried about the results of them.
Got you. Okay. So this would have been one,
Right.
and the next price trap would have been this guy.
We lost your audio.
Oh, I'm sorry. And the next price trap would have been this candle here.
Correct.
Yeah.
All right. So sometimes when you have that massive price trap like that, if you keep filtering down, you'll come to a lower and lower price trap somewhere along the way.
And this is the one that we would actually take because this is more.
I would prefer that one. Yeah. Well, it
Okay.
keeps my risk, a little bit tighter. Do you follow me?
Yep, that makes perfect sense.
Okay, now taking another cue from the 1889 when we want to do this daily system, when you do see the pullback, remember on the 1889 we would start drawing trend lines. You can also move your entry up to the prior low, up to the next higher low, I should say in this case. Or in a case like this, this is a nice, well, all of these would have been nice. These are all nice middle-sized candles. I like all the entries in here. But this would be a case here where we want to go long, and at the daily we place a long here. Pending order, a what kind of order? Anyone?
Buy stop.
Okay, great. Thank you. This would be a buy stop. It didn't trigger. You could bring it right down here. Again, for another buy stop. All right. And then you would move it over here, and you could just continue to move it. But I prefer the moderate size, middle sized candles with not much of a wick on either side, because those tend to be better movers. All right. The other way that is the more popular way would be to look for an inside bar like this or this or this. Okay, look for inside bars or dojis and place your orders accordingly there. Or on this one candle pause. When you get a one candle pause, that's another way that you can look for an entry. So you want to look for a small, moderate entry or a moderate sized candle in the direction of the prevailing trend, and then place your pending order right below it. Okay, and in this case, your stop would go above that high, which is a bit much for me. I would, cut it to the middle of the candle about, because I want to keep my risk controllable. Now, the other thing you can do is have a fixed. Now, if you, the 8 moving average comes in another way also. With the 8 moving average, what many people do is when they place their pending order here, they put their stop at the 8. Okay, so when they come back the next day, they see where they are. They can physically move the stop down, bring the stop closer to the trade, and this usually gives enough room for any unusual things to happen in the market. If there's a news event coming out that night, I would try to stay away from that specific candle. Okay, and maybe wait for the next day until after the event has occurred, because usually after a major news event, you'll get a change in direction that will last a couple of days. Let's pull this down. Let's take a look at another. Oh wait, let's look at our current candle here. Well, this one's already going, so this would be my pending order here, because we're below the 21 or the 8, depending on which one you want to use. All right, so then this would be our pending order. By the time this candle makes its wick and then makes another candle, and then let's say the candle after this may make a wick that comes this high. You got me? Let me make a little Rob Rice candle here. Oh, I can't do it that way, huh? Okay. Yeah, you can't put this thing in the middle of the candle, which kind of sucks. But let's assume that this is a candle, and let's assume the wick goes here. And then you end up making another candle here, and then that candle triggers the trade. Usually price won't come back up in this area because it's made its wicks already. You follow me? So usually waiting a couple of days for the trade actually gives you a higher hit rate.
Okay, Lou?
Yeah.
Dollar CAD daily is a great example of what you were teaching yesterday.
Dollar USD CAD. There are a couple of nice trades in here. Is that what you're alluding to?
No, the channel. So you'll
like
me to draw that?
You're speaking of this channel?
Yeah, well, at first I went to a line chart.
Oh, I'm sorry. Let me. I didn't realize what you meant. Okay. Let me just clean this up. I'm assuming you drew a channel like this or something similar. Or wait, let me give you control.
Yeah.
So I can see what you were looking at. All right, you've got it. Let me go back to Andre. All right, you've got it, Daryl.
Okay. Not yet.
You don't have it yet?
Oh, okay, now I have it.
Okay.
All right.
What time frame were you talking about?
Oh, daily, yeah. So we're correct. So yeah, on the daily, yeah. So this one is okay. Let me look at mine here. 1, 2, 3. 1, 2. Oh, okay. Let me scrunch this down a wee bit more. Okay. Okay. So.
Okay. I agree with that.
Oh, double click. And I had it about. Okay, right about there.
All right, that looks good.
Okay, so this is what I was looking at. Plus, if you look at this, the stochastic down here. Okay, so the stochastic is also in agreement. Now, if we
Yes.
switch over to the candles here, you can see it actually did hit that. And then, so anyways, that's primarily what I'm looking at. I almost put a trade in on it last night, but I had to leave kind of early, so I didn't. And so then I would expect it to go, of course, down to the other end of this thing. Maybe it will, maybe it won't. But I was just kind of drawing some lines last night, ran across this one. This looks a little bit weird, but on a line chart, it's
Well,
much.
yeah, and you got a bunch, and they're all fake outs.
Yeah. So that's why I kind of put the line in the middle here.
Yeah, and that was good. Split the difference. I agree with that.
Yeah. Anyways, this is exactly what you were showing yesterday, as I recall.
Now go back to the candles again.
Yeah.
And what you'll notice, if you remember, the strongest trade in this would be a bounce off the bottom. That's your strongest trade because you'll be staying with the trend. If you want to take the trade you were speaking of, I would, now me personally, I would reduce the lot size and aim for the center of the channel.
Okay.
You got me? Because you're going counter trend.
Right.
You could certainly get that far, but remember, if we measure from here down, it's like 200 pips, which is nothing to sneeze at. But as each candle moves farther to the right, this continues to move higher. You see that? So by the time this touches this line, it may only be 75 pips.
Yeah.
As price continues to go sideways. That's why you try to aim for the middle of the channel, which would be about in here, about 35 or 40 or so. And then you can decide what you want to do from that point, because you're going counter trend. So that's the only thing that I would do there. But this has got all the makings of it. You've got 5 white candles, 1, 2, 3, 4 white candles. You got the warning candle here, because this candle body is inside the prior candle wick.
Right. Yeah.
So yeah, there's a high likelihood that this is going to drop short for us.
Now, something else that I was looking at a couple of years ago was when I was drawing a lot of channels and using some other formulas, but I'd draw the channel, then I'd always drop a line right in the middle.
Correct. Yep.
Just to give the middle point, but quite often the middle point would also be somewhat of a line in the sand, not as neat or clean as the top and the bottom usually, but they'd usually give you some interesting points on there.
Yeah, and it gives you a good decision point.
Yeah, that too. Okay, so that was it. But,
okay, that's actually pretty good, and I like this trade.
Yeah.
All right. So now what you would do here then, if you wanted to get into this, or one avenue would be to set up a sniper So we're going to go here, and I'm going to use the current price where we are and go down to a, let's say, a 15-minute,
Hmm.
and then we'll look for a decent complete entry down there to keep our stop smaller. So we're right over here at the moment. So this is a breakout, okay? And this next candle did not close back inside here, all right? So that's an indication that this could go short. Now, this candle could go up and curve back and come back down again, which would be okay. I just don't like the next candle to come back. That's almost always a reversal.
I see.
It's very, very rare that it does that. And if you go back and look at the fake outs, you'll see what I mean. If that next candle comes back, it usually keeps going in the direction of that other candle, the fake out candle.
Talking about comes back to the previous swing high.
No. If it comes back to the breakout point, if this candle closed above this line, that would be a fake out.
Oh, okay.
You got me. Let's go back to the daily because there's a couple of them there that are kind of easy to see. You see this candle broke out. Let me open it up. Oh, wrong way. All right, this candle broke out of the trend line. The next candle came right back in and closed below the trend line, and price continued in that direction. Do you follow what I'm saying?
Yes.
Same thing with this candle. This candle broke out, and the next candle came right back in, and price eventually did continue to go short. Obviously, it went a little higher, but you get the idea. Let me just look for another fake out here. This one not so much because of how the trend line is drawn, but you still get the idea. Where this one broke below the trend line, I overdid that trend line a little bit. It was more like that. You know, this one closed below the trend line. The next one came right back inside again, and price kept going. All right, so that's the one thing that I'm always cautious of. This one opened above the trend line. The next candle came right back inside and continued. So that's the thing that I look out for. So now if we go back down to our 15 and this sniper trade here, the next candle did not close inside. So this doesn't bother me that this is going to go up and down because this could turn right back around again and come back out. You got me? But if this next candle comes back in and closes, I don't want the trade at all. So here, what we would.
Can you elaborate on that? What do you mean close? That next candle closed above, then you'll be leery. Could you just elaborate a little bit more on that? I'm sorry I didn't get it.
Okay. Usually, what happens with breakouts, people will draw these support and resistance lines or trend lines. Let me just get a different pair here. That was dollar CAD. We'll come back to that. Let's pick pound yen, and let's make it a line chart. All right. And what happens is people will pick, let's see, this looks like a good area here. I'll go across here like that. Now, everybody other than Andre can see the fake outs. Am I correct based on what I just did?
Yeah.
Yes.
All right. But we'll hold that in abeyance for the moment.
Abeyance? Oh, that's from my favorite show, La Femme Nikita.
Oh, okay. So, do you agree with this channel, Andre?
Yep.
Okay, cool. Now, when I go back to candles, what I want you to see is that you see how this candle closed below the bottom of the trend line, below that trend line? And look what the next candle did. So a lot of people say, hey, we broke the trend line. Yeah, so this one's better because, this is actually, that's actually good too because this is the first triangle. The first of 5, 1, 2, 3, 4, 5, and out. But this one's better. Here we say, okay, we've closed outside this trend line that was drawn in here with all these taps. Let's go short. And look, the next candle closed right back inside the trend line and continued.
Got you.
Look at this candle. this candle closed to the top. You say, okay, we're going long now. We broke the trend line, and the next candle came
Yep.
back and continued to go short. It's that next candle. That's the one that for me is important. If this candle closed back above and price came back underneath, it could certainly just make a loop like this. Okay, you follow what I'm saying? It may make 2 or 3 candles up
Yeah.
and then come back.
Yeah.
That doesn't bother me as much. All right, but that's the type of thing that you look out for. All right, I like to
Cool.
see the
Thank you.
next
Thank you.
candle. Yeah, I like to see a breakout, then a retest that does not close back inside on the next candle, and then I want to see prices take off again. And if you're looking for the conservative entry, you would look for prices to trade above this high. You got me? A moderate entry would
Yep.
be above this high. I just hit backspace. Okay. Did that clear that up? Andre?
Yep, made perfect sense.
Okay.
Thank you.
So we're on pound yen. Let's go out to the daily and just see what this daily candle would have given us. Come on, trend line. What is this dotted line here? Is that from a higher time frame or something? What is that? Okay, it's gone anyway. So in this particular situation, we had a couple of nice daily entries here. Okay, and there are a number of ways that it could have been handled, depending on which moving average you use, and they both work. But let's go with this particular candle here. This is a Monday candle because that's our Sunday gap. All right, your pending order goes right below here. And as I mentioned before, by the time price, let me just put the line here so I can use the mouse. By the time price finishes this turnaround like this, and you get triggered into this trade, there will high probability you won't get any more candles coming. Okay, that's Daryl, I think. There's a high probability you won't get any more candles coming back to this high. Did you follow that? And this would be our second entry. If you didn't want to wait, you would move this your entry up to this candle and then to this candle, and you would chase it in a very similar fashion that we would chase the 1889. All right. The only difference is that we're not necessarily concerned with the color of the candle. I just like the smaller candles like that because those are great breakout points. All right. And then here we had a nice pullback candle. It's a little large. If this candle were a little smaller, I would like the pending order right under this candle. All right, so then by the time we're triggered in here, this wick is already done. All of this has already happened because remember, the first thing that happens is the open. The last thing that happens is the bottom wick and the close. So all of this already happened. So our stop going back up here would make good sense. And now we're into this trade. Now on this daily candle, on the assumption that this massive uptrend that's been in place for a while is over, I'd be looking at a pending order here. Got me? And that's right about at the 50% level. So this could certainly crack the 50 and go down to the 618. Let's just throw a fib up here. Yep, there's our 50. And this pending order could certainly make its way to the 618. That wouldn't be, on a pound yen, wouldn't be a surprise at all. And here you're looking at a 200 pip move. You see that? But I would not have put a pending order at this low on this day because of the size of the candle. I would like to see a small candle show up or a couple of pullback candles kick in. Do you follow that? On either the 8 or the 21. And let's just start at the top of the chart and run down. Are there any general questions about what it is I'm looking for on this daily system? Because this is something you look at now my daily candle starts at 5 o'clock on several brokers. All right, so you need to know what time does your daily candle start. And what will happen is this candle will be closed, and on a daily chart, you'll see this. That'll be the new daily candle. So now this will be where you'd want to put your pending order. Everyone follow that?
Yes.
You wait until you see that candle open, and then you can place your order there at that low, and place an appropriate stop. And like as I said, I prefer to go to the high of the last candle unless it's just way out there. And if it's way out there, then I'll cut down, down to like a 0.2 lot size, or even, well, I don't know, a 0.1, because that takes a long time to really build up. But I go down to like a 0.2 or something rather than a whole lot or a half a lot. Got me? That way, if the trade doesn't work out, my the loss is still within my daily loss limit. All right, so we're going to let's just delete these lines. I must have a lot of lines on this chart somewhere. Let's get rid of this, and we'll start at the bottom of the normal pairs here, which would be Aussie New Zealand, and we'll come over and we'll assume that this that's a beauty. That is a beauty. Okay. If assuming this was the, let me get rid of these lines. But you see how fast you can see a nice potential trade.
That's beauty.
Right, exactly. And it's a pin bar. So let's assume this was that daily candle. What the hell is this? These people. Let's assume that that's the daily candle, right? And then our open of the next candle would be here. And now you'd put your pending order down there. All right. And you could put your stop at the 8 with the thought that if you get triggered in the trade, you can always move it down later. But that's a nice setup. But this candle's already in formation. Got me? That's a beauty. Pound Aussie.
Hey Lou, what's
Yeah.
the beauty about it? Like, it's a beauty to go long, or it's a beauty to go short? I'm still trying to develop my spatial intelligence.
Oh,
to
it's
kind of see. So
okay. If you remember, the core rule is we always want to be in the direction of the moving averages we're using. And you can tweak the moving averages, but the two popular ones for this method are the 8 and the 21. Okay, the 8 because it hugs price pretty closely, and some people like to use the actual physical 8 as where they place their stops. Then the second thing I'm looking for is a small candle, because prices always break out of these ranges. They always break out of these because there's no money. No one's making money here. No one's making money here. And look what happens when they break out of it. It's a hard move. You got me? And when it breaks out to the top, it's a hard move up.
yeah.
Okay, so that's what the market likes. I like this. Okay, I like these smaller candles with the direction of the trend. Okay, that's the.
So which direction?
Now, right now, because we're below the 21 on the close of this candle, I'm looking for small candles that I can take short. Did you follow me on that, Andre?
Yeah, the small candles that we can take short. Now, shouldn't the bottom be the RSI, or it's still
No.
That's
That's got nothing to do with it. That was from something else. This is
Okay.
just a straight away simple. And it's even better when you catch that first candle that breaks through, because you'll get a little bit of a
the one that
pullback.
breaks. You mean
No,
the
no,
first candle that breaks through the trend line?
Yeah, it doesn't have to be, but it's better when you catch the first one, especially like after a pullback like that or something. You got what I'm saying?
Mm-hmm.
All right. So what you want to do is stay with this trend, and then we'd have a pending order short right there. Now, keep in mind, this may take a day or two for price to come down and get below this point. You follow that?
So it looks like yes, and it looks like the overall direction of the trend is an uptrend.
Well, if we draw a trend line, you'll see that was broken by this candle right here.
Okay.
See that, Andre? And you see both your moving averages are turned over.
Gotcha.
All right. If I extend this trend line out, just so you understand that precept, if I put the trend line down here, you see both moving averages have turned over here, but nothing closed on the other side of the trend line. So all this is a pullback to the trend line.
Right. That's why I guess if I was trying to make this trade, I would assume that this is really it's going to continue going long. It's not going to be a short opportunity because it's going to hit the trend line, bounce, and then go back. But because the second candle closed under the trend line, that's the indication that the trend has been broken.
Well, let's see what happens at the end of the day. Did you follow me? That's how I would look at it. But if this were a daily candle, if this candle was completed and the new day started here, I would have a pending order there.
Got you. Now it makes sense. Okay. Got
All right. Now the other version of this is to have a straddle where you have an order on either side. Okay. Now there are some people that like to place pending orders on every daily candle, every single daily candle. It makes your risk management a bit quirky because the candles are all different sizes. Oh, thank you for that definition, Daryl. I didn't see that in the chat.
Yeah, I mean,
I put the word, I used the word correctly.
Yeah, you did. Yeah, you did.
There are some people that like to place pending orders on either side of every single daily candle. And that works good. That works well also. What I personally don't like about it, me personally, is that you can't really get consistent control of your money management because one stop will be 40 pips, one stop would be 150. And when you look over the trade logs of successful traders, you'll see that the stop losses are always consistent. You know, if they've got like a 40 pip stop, it's always a 40 pip stop no matter what happens because at least you know that your risk is controlled. So that's why I personally don't like going over every candle. I'd rather hand pick the candles. You got what I'm saying? And you know, when I look in here, like you can look for certain clues like this. If you want to do something on every candle, then what you want to do is find candles that make sense. And this is a conditional candle. You see that?
Yeah.
Right.
So you could go above this and below that because on conditional candles, that's generally an indication that the market's going to go higher.
Yeah.
This is a conditional candle. So you wouldn't mind going right above there. So if you look for specific candle types, which I prefer to do, if I'm going to take a straddle, well, yeah, then I'll say, well, on this conditional candle, I'll go long. All right. But again, you can't really get a consistent sense of stop because here I'd have to use a 160 pip stop. You follow what I'm saying? That doesn't mean it won't work. It just means that you're a little bit more of a gunslinger in that respect. All right. But you'll see most of your conditional candles will give you a decent trade or give you some profit.
It looks like putting stops above like those two smaller.
Wait. Let me give you control.
Oh, I thought I had it.
No, well, yeah, it got buggy and I took it back.
Okay, so like these two right here. So now you got a good move up. You come off a bottom, off a double bottom, good move up, second move up. So yeah, put the stops above these two. I really like that approach.
Put the stops above those two for what? You mean the entries?
I mean, not the stops. You mean the
entries.
The pending.
Oh yes, I agree. And keep in mind that on this candle, remember when you have that little guy like that, and I like this because it's the right size candle, nice and tiny, your stop would then go to the back of this candle. You follow me?
Yeah.
All right, and that allows the market to move a little bit. And remember, this trade, you won't get triggered into this trade until this candle. And by the time all this price action has occurred, it's very unlikely price is going to go from here all the way back there.
Okay. So what would be, I mean, I might, okay, I like to be a tight ass, so I might like to put my stop then below just this one, the last swing low.
Yeah, you can certainly do that. Yes.
And so that.
But keep in mind, yeah, because you don't know what this candle is going to look like. It's easy to see that it worked out because we can see this candle. But if I roll this over here and do an F12, let me squeeze this over so we get a little more of the candle. Okay, so now you'd put your pending order above this high.
Right.
All right, and where would you want your stop? If that's all you got, that's all you can see.
Yeah. Well, then, yeah, it's the previous candle's low.
And the reason for the previous candle low is that when you see a black candle after, this uptrend, you generally will get another one. Remember, it's 2 to 3 candles in the pullback?
Yeah.
And 3 to 4 in the thrust. So that's why you want to go back to this low. And now if we go to the next candle, F12, you'll see exactly what happened here. The next candle made another pullback.
Mm-hmm.
Okay, you got me? And the entry price is identical for all intents and purposes. All right, so now you'd have
Lou,
sorry. Go ahead, Michael.
I was going to say, what you're talking about there, that should work well on inside bars then.
It does. It absolutely does.
With the trend, wouldn't it?
Yeah, absolutely does.
Inside bars with a trend, would be a good one.
Yeah, I think I mentioned that yesterday, the inside bars with the trend, but there are a number of variations that other people use that they're also successful with. So I'm showing the number of variations, and you pick what works for you. That's essentially what I'm getting at.
Yeah.
So the inside bar, yeah, that's an absolute trade that works pretty well with the trend, especially with a nice established trend like this.
Yeah.
Okay, with either the 8 or the 21 or whatever moving average you feel comfortable with. All right. So you see what I mean here, Darryl? When you get a pullback, it's likely to be followed by another pullback. And even if this candle wasn't black, it could have had a long enough wick down here that could have created a headache. All right.
Sure.
Oh, I didn't know you could pull this off the chart. Oh, shit.
Oh, what?
Oh, how do I get this back now?
Oh, you just close that window and then go back up to view and open it.
Close this window.
Yeah.
Market watch. No, see?
Oh, okay.
Oh, there, I double clicked it. What happened when I grabbed this? You guys can't see. I have 4 monitors. This whole box went over to a separate monitor. It's like the old MT4 floating charts. I still have that software. I don't know if it works or not, where I could grab this whole chart and drag it off of the MT4 platform and put it on another monitor. So that was kind of cool when they had that. Yeah, so to go back to Michael's point, the inside bar, like this one, or this one is like a warning candle because the wick is inside the prior body, and an indication that the next candle could reverse, and this one did, but it didn't go very far because we've got a nice strong uptrend. But all the pending orders up here would have worked well, and you have your stop back here off of this original candle here. You follow me? And then you can always slide your stop loss up as you see price action take place. All right. So we were working our way up from the bottom. Let's get rid of this. And I'm doing all this in prep for next week, so we can start hunting some of these. Pound Aussie. Well, nothing got triggered here for a long. Nothing got triggered here for a long. And these wicks are a bit long for me, so I'm not thrilled about it. But if this were the end of the day and my new candle open was here, I would have a pending order there to go long. You follow me? If this was the right type of candle. And on my broker at 5 p.m. New York time, I get this brand new candle. You with me on that?
Yeah.
Okay, Pound New Zealand. This is another night. Did we do this already? This looks like Pound Aussie.
Yeah, we did.
Yeah, it's the Aussie Kiwi, same thing.
Oh, okay. Well, again, if this were a daily candle, this would be a great place for a short.
Yeah,
Okay.
I agree.
Pound CAD. Again, I like this candle. I'd put a long trade up here because this is a pullback.
Hmm.
You got me?
What if it closes below the 8?
Uh, well, if you're using the 8, then you'd want to put your pending order down here. But the original system, as I learned, it was with the 21.
Okay.
But I've talked to some people and said, hey, have you ever looked at the 8 and use it at the 8? And what they do with it at the 8, by the way, to add another dimension to this, is that they like to put trend line breaks at the 8. So when they have this trend line on the close of this candle on a daily, they're in right there. They like to see the wicks come back and actually tap the 8. And then they usually have the last guy I talked to had a 34 moving average. Let me just throw that in. I don't want to give you too many variations, but I want to give you enough that you can make a choice from. The other guy had a 34 moving average as his overall trend and 8 for his bounces. So as long as the 8 was above the 34 and we kept pulling back into this area between the 8 and the 34, then on the next day he'd be long right here. You follow me?
Yeah.
You get that? I don't want to throw too many different variations, but they all work. It's just a matter of patience, waiting for your setup. So now let me just make this a no color just for the temporarily, and we'll put it back later. So that concept would be he wants prices to touch and tap the 8 or come into what I call no man's land, and then he's looking for a break back above the 8. And then he's long right here on the next day. When this candle closes and he sees this, he's long on the next day. Okay? You sometimes will get fewer of these, but they tend to be higher probability because he's just playing the pullback. All right? And let me put the someone's about to take off. We have a fighter pilot here in here. And that was a 21.
All right, Lou. Off to work.
Okay, Andre.
See you. We need to talk this week and update that Excel sheet.
That spreadsheet. Yeah, I do want to get to that.
Yeah.
Okay.
Okay.
That was
Give me a call this
21.
weekend.
Oh, there it is. Okay. Will do.
All right, guys. Enjoy. Bye-bye. Cheers.
Lou or Andre, you still there?
Yep, I'm here.
Okay. So, Lou, before he goes, maybe you might want to think about that new link for Skype room.
Oh, yeah, Andre.
I was going to ask you, too. I still need to get added to the group.
Yeah, I'm going to post a link in this. I'm going to post a link in the GoToMeeting chat, and you click that link.
I already signed off.
No.
No.
Yeah, Andre, I'll post it tomorrow.
Okay.
I didn't get a chance to get to it yesterday. I had some unfortunate news yesterday, and that kind of pulled me away from it. Yeah, well, a friend of mine, her mother died in a awkward car accident. Well, there's no such thing as a good car accident, but yeah, the driver, which was her husband, got spooked, and instead of hitting the brake, he hit the gas and went right across the lot and slammed into a fence. And when the airbags went off, they hit the woman, and this is an elderly woman. The airbags went off and hit her, and it sent her into a heart attack.
Oh, wow.
So
Sorry,
it happened a couple of days ago, and we've been just kind of out of sorts. So coming back here to do this is kind of like therapy. It gets my mind in a different state.
Exactly.
Yeah, so life happens. And I have to change the driver with my wife to get her to therapy and back because that's become a little bit of a hassle where I've had to take a day off to actually drive for the physical therapy, which I'll do every single day if I have to, but I tried to work it all out so that I can do my thing, she can do her thing, and so life happens outside of trading, and you got to roll with it. Okay.
Yeah, you might want to try to use Uber. Maybe that might help.
Yeah, but the issue with Uber are I'd have to be able to get the same car that can take a wheelchair. and Uber can't
Yeah,
guarantee that.
with Uber, oh, it can? Because if you actually pre-schedule it and you have it set up, then it's actually set, where
Right.
it's not a random call.
But I can't guarantee the same car every day. And some drivers don't
Okay.
want to take a handicapped person because if something happens, if they fall getting out of the car, getting in the car, and
Okay.
it's a whole
Gotcha.
thing. So we use an ambulette service, and their guys are trained to handle all this stuff. But they've had a couple of
Okay.
situations where the guys didn't show up or didn't call to confirm, and anyway, it's kind of non-trading stuff, but you get the idea. All right. Yeah, so just life happens, and you got to roll with it. I generally don't bring all that stuff into the room, because there's no place for it. But it's just that's why I didn't get to all that stuff yesterday to get everything all sorted out. The phone went crazy, and everything else had to be taken care of. All right. So I'll
So
talk
I
to you
should
over the
log in
weekend.
tomorrow to go to. Okay.
Yeah, and tomorrow I'll post a new link, and that will be our new room because somebody, I got an email saying that they saw someone using one of my videos as part of their teaching process.
Oh my God.
Ooh,
Yeah, which
not
okay,
good.
yeah, it's not that I'm that great, mind you, but
No, but you had to spread it, and it's the right way of doing things, and that's obviously not the right way.
yeah, and it's not the first time it's happened. So, and initially I didn't give a shit because I'm teaching it for free anyway. So it's not like they're stealing, but the fact that they take it.
Unauthorized use is unauthorized use. I mean,
Yeah,
even if you're giving for free, you're still saying, I authorize you to do it. Just let me know that you want to use,
Yeah, even that.
the
Yeah,
resource.
yeah, I totally agree. If someone said, "Hey, can I use this in my setup or whatever?" Yeah, go ahead. I'll even be glad to come down and do a live one for you. But just to show up, Anyway, I don't want to get into all that. I don't want to get frustrated.
Yeah.
Um,
I'll shoot 'em.
yeah, because trading makes me happy.
Yay.
All right. So, yeah, I'll talk to you over the weekend, Andre.
Okay. Everybody have a great weekend, and see you on Monday.
Hey, Andre.
Yeah.
Andre? Yeah, take your time going, but hurry back, all right?
What's that?
Take your time going, but hurry back.
Yeah, will do.
That's usually what you say to a girl that's got a nice set of hips as she walks away. You want to see that motion on the way out the door.
Oh, you're so bad.
I know, and it's the lesbian in me. Okay, so again, if this were the daily candle, my pending order would be long here because we're above our moving averages. And again, you can tweak the moving averages. I'm showing you a few different ways of going about this. Got me? The other way, again, would be a trend line here, and you want the trend line break above that. That's much more like an 1889, but you'd want to be, you want to follow these moving averages, then you place your pending order long there. And again, okay, it is being recorded. Sometimes I talk very quickly, and I'll talk over 2 or 3 strategies in the space of 30 seconds, and it may be hard to catch it on the tape, on the recording when you go back to look at it. That's why I say if I'm going too fast, let me know. Oh, this is beautiful.
Well, look at that gap.
Yeah. Oh, yeah. That was a hell of a. Was that about a month ago?
Blind your mind, guys. I'll have a lot of orders in there later.
Oh yeah. And another decent one here too.
Yeah.
This one filled. This one never filled. A lot of people got hurt in here.
Yeah.
But here would be another great place for a pending order short. Okay, would be right below this candle. Now I would need this candle to be a little bit smaller, ideally. But this is a great spot for a pending order here. Now, because the prior candle doesn't have a higher high, then you'd put your stop at the high of this candle or at the 8. All right, and the 8 is popular because it's a Fibonacci number, I guess. I've been really, really researching the moving averages to see if anyone's done any actual research on these moving averages and how they behave with price. And I know the 8 is popular, but I can't find anyone that's done any study on it.
Well, Bill Williams seemed to use them a lot, didn't he? I mean, his alligator is all.
Yes, absolutely right.
Fib numbers, isn't it?
Yep, sure is. So I don't know, what he did or where he got it, but I'm not going to go against it. All right, but this would be a great place for a pending order, short. Now, in this case, this is good because this is a possible pullback. This pending order may take 2 or 3 days to unfold. We don't have a writing tool, right? No. So what may happen is this price will go up a little bit and make kind of a loop. You know what I mean? To come back to this. This is terrible. I wanted to make more like a semicircle, but you got the idea. So that by the time we enter here, the candle that makes the upper wick won't come back in this area.
Yeah.
So that's actually a decent place to sit and wait for a trade for a couple of days if that's what you want. And if the next day doesn't trigger a trade and makes a higher low, you could chase it up there with the advent of putting the stop at the 8. Now, what I'm not mentioning here are things like the double zeros. You want to keep those in mind, the psychological levels. Or also try to keep in mind any obvious support and resistance. You don't have to get crazy with it. You don't have to really overcomplicate it because you got all day to think about it. You follow me? So we're not really near anything, and this is a daily candle. If this is like a month, how many days is it from here? That was 112 days.
Yeah.
You know what I mean? So it's not like you have to rush. You never have to rush to get into a trade. All right, let me blow this open again. And then we'll look at the next one, and we'll look at several other different entry methods so I can make sure that we can discuss them all. All right, this is the, a lot of these markets are turning around. I wonder if this is the grease effect. All right, so in this case, on this first candle that cracks these moving averages, you can certainly put a pending order down here with the stop across the top, particularly on that first candle that cracks it. All right, because remember, like here we have a fake out. This candle cracked the low, and you see the next candle was a fake out. It went right back above the moving average. But the key here is that you never got triggered into the short. You see that, these two candles? I'm just picking that out because it's very obvious.
Yeah.
Same thing here. We have price action below the moving average, not necessarily a close, and the next candle came right back above the moving average. So you could certainly put a pending order here. All right, when you get that first candle, you can certainly put a pending order here, and if the next candle goes back, more than likely you won't get triggered into a trade, but this is a nice setup. This little candle here is a great setup. All three of these are good because I like the smaller candles, the smaller than average candles. All right, pending order below here would have been a beauty on that Sunday.
You got that warning candle there as well, haven't you?
Right here.
Yeah.
Yep. Got the warning candle, so that's another one I would like, which is stop right up there or at the 8, depending on your risk management. All right, so that all looked good. The other method is to, as I mentioned, I have a couple of people, they like to put the trend lines in, break of the trend line, stop below here. I'm sorry, entry here, stop back in this cluster, usually at the swing high. That's another way of doing the same thing. And you still also have your price traps. All right, I don't confuse price traps with these, but that is a viable option if you're comfortable with trading with the price traps. Okay. Let's go to Aussie CAD, which I think we looked at. Whoa. Now, this initially looks ugly, but this is like a great spot to put a range trade in. If I come down here, just to look at it initially is like, oh my God, I can't, and I'm just not interested in that. And that would be your range right there, which I like, because we got 1, 2, 3 of the triangles in here. So you could look for an entry short, come back down to the bottom of this. Okay, and if we break it with a proper break and retest, remember, no fake out. If we break it, then we've got this approximate distance on either side. So that initially looks ugly, but if you understand price action, you could say, there's money here. Got me? Our daily trade, if this were the closing candle, will be a daily trade pending short right there. Let me open this up. All right, our pending order would be right here short. Okay, assuming that we had a new daily candle formed right here at 5 o'clock. All right, and again, this is another one that may turn around and take a few days to get to the pending order, but the price action will be such that price coming back to the stop loss up here is unlikely. All right. EuroCAD. Again, it's another nice range. I don't want to confuse everything here. But if this were the daily candle, it's a little bit long in the tooth, but I'd still put a pending order up here. But I would prefer my stop maybe in the middle of the candle, something like that, or at the 8. But more than likely, I'd like it in the middle of the candle. That's just me. And remember, I do get my fair share of trades that don't pan out because my stops are tight. All right. And many times, my stop will get hit, yet it'll go right back in my direction. I'll be 100% correct. Same scenario here. Now, what would happen here, if I put a pending order here, I would mark my stop down here because this is a pullback candle, and it's likely to be followed by another pullback candle. You follow me on that? I'm still looking to go long, but I've got a pullback candle here now. So if my pending order is up here, my stop will be down here. We'll let these pullback candles do their thing, and then this may be another one 3 or 4 days before it comes back up and hits my entry. That's a Euro Aussie. Let's go to Pound Chef. Again, now see fake out in process here. See that? This candle closed below the moving average, but this one's coming right back into it. And I've got 3 moving averages, so I'm kind of being a bit nitpicky about that. But I just want you to see the process. Our pending order down here. This may take 3 or 4 days to come back. And again, this is a pullback candle, so there may be a couple of them before price turns and comes back to hit our entry. By the time price hits our entry here, it's unlikely we're going to get a wick that'll come all the way back to that high.
Yeah.
Chef Yen. And you'll see this better at 5 o'clock or when your daily candle kicks in. Same premise here, another pullback candle. All right, pending order here to stay with the trend. This may take 3 or 4 days to turn around and come back, but the same thing, our stop would be right there. And by the time we're in this, remember, these candle wicks will be done doing their thing. Pound yen, same premise. Dollar yen. And as you do this, by the way, the other thing you'll see when you do these dailies is that you'll get a feel for where a lot of the overall market is moving, because you can see a lot of these yen pairs are all doing the same thing, all turning short, in part because of the whole thing with euro. There's a lot more buying pressure going on with the yen because people think that transferring euros to yens may be a safe bet, at least on a couple of blogs that I've come across. That seems to be their strategy.
Yeah, yens seems to be considered a safe haven.
Correct. So pending order there. This is a pullback candle. Let price come back to you. New Zealand dollar. And this is that weekly that we were looking at here. Your pending order would be here. And this could go up. Now, there's no indication that this is going to go, 100 miles. But if it takes off, I know where it's likely to. Oh no, that's from the other stop. We were looking at like the 50% of this move on a weekly. That's what we were looking at. But right now on a weekly, this is just one candle. We'll see what happens next week. But again, pending order short here. Okay, let this come around to you.
I know a couple of people have been burned on that there.
Oh, well, what were they trying to do? Go long on it?
Yeah, we're going long on it all the time. I mean, I told them, I said, you're crazy. But,
well, yeah, when all the evidence is pointing short, some people. But this is the difference I mentioned about men and women. Guys need to be right inherently. I guess because they're the hunters and all this other stuff, and they're the ones that have to find directions, and so they have this need to be right. And women traders want to get it right, and that's a key difference. And I try to think more like a girl in that respect. So as long as I see this, and I've said this several times, I see no evidence of a long trade. You got me?
Yeah, nor me.
Yeah, but a lot of guys, they figure this is the bottom.
Yeah.
For whatever reason, I don't know what they're looking at. You know,
I think they had a fib on there, and they were saying, "Oh, from this fib it must bounce." And I'm going, "Why?" But
yeah.
you know, I don't use fibs, so I shouldn't criticize. So
Believe me, indicators, Fibonacci, Gann lines, all they are suggestions.
yeah,
That's got nothing to do with the facts. They are just suggestions.
yeah. There are some people that seem to think if it hits 161.8 fib, it has, 99.9% going to bounce from there. You know why?
Right.
It doesn't.
It really doesn't.
Yeah.
In an interview with a bank trader the other day, he did confess that fibs are a big part of what his banks look at. Fibs and the 20 and 50 moving average. And he said that many banks pay attention to fibs, but what they like to see are fib clusters. Let me just get on a blank pair here. And by fib cluster, and I guess you guys know this, but for those of you that may not have heard that, I'm drawing a fib from this low to this high. Okay?
Yeah.
Then I'm going to draw another fib from this one to the bottom. And now this becomes a very interesting point because you got two different fibs from two different places sitting at the same place. Then I'll draw, let's see, what would be the next swing high would be right in here, I guess. Not picking an ideal spot, but I want you to get the concept. Now we've got three fibs sitting on this point. So they'd say, wow, this could be a very key area. And then they'll look for the nearest 00, and then that will become a bit of a range. And they'll say, okay, we're going to buy X number of euros in that spot, somewhere between that fib. And they look to see where's the next psychological number, either a 50 or a 00. And that'll give them the area. You follow me?
Yeah.
So it was interesting to hear a bank trader, because everyone wants to know, what do the banks look at? And at least at his bank and the bankers that he speaks to, fibs and the 20 and 50 are a big part of it. Now, I don't know the rest, but that was good information to know. Okay. So if this were, again, our daily situation, this is a pullback candle. I can safely put my stop right down here. Okay, and this would be good for a live situation for right now, as a matter of fact, because this candle's got to pull back and come back and do its thing. So a pending order like the spread below here, whatever this is, and I usually add the 2 or 3 pips for the spread. We skipped over a couple. Where did we stop? Because I wanted to get a blank chart. Let me go to Pound Chef. Let me get. Oh yeah, I talked about Pound Chef because this could be a possible fake out in the making. But this is where you'd put your pending order. If you want to do this right now, you can put your pending order here. And again, we'll go over these. We'll run these down every day next week, and the other methods, and we'll start looking for these trades. We did this one already. Pound yen, obviously pending order down here. Okay, stop up there, which is a bit much for me, but with the pending order, you don't really have to worry about it because this has got to come around to you. Dollar yen will probably look similar, and it does, and we did that already. New Zealand dollar, we just talked about that. Dollar CAD, Darryl pointed out a great looking trade here on dollar CAD. Possibility of a drop down to somewhere between, let's say, 40 and 70 pips. Possibility, and it's got everything lined up, right. You got your trend line break off the channel. So, but this candle's not closed, obviously, but everything else seems to be lined up pretty well for that. Aussie dollar. This is the one that I am back in this trade, okay, because of the 3 taps here. Now this is kind of counter trend because I'm bucking the overall trend.
Yeah.
But what I'm looking at is these hard bounces off these double zeros generally will produce a nice 100 pip move. And that's what I'm looking at. Doesn't mean that this is going to go long. It just means that this is going to have a pullback.
Yeah.
And oh, this, by the way, was 100 pips in this one candle. If you measure it from top to bottom, you see that?
Yeah.
All in that one candle was 100 pips.
Yeah.
So this is not an unusual thing at all. But as I said, this would have been stopped no matter where I put my stop. The original stop was here at this blue line at 7,400. And if I think if you go back to the tape, I had the order box placed right here, and it had everything in it, and I never hit the send button, which it's just funny to me. But I'm going to take another shot at this. Hopefully I'll be around and I can catch 25, 30 pips and split the trade or move my stop loss up or something like that. Euro yen, similar situation. Put your stop here, wait for all this to occur, and come back. Aussie yen will probably be a bit similar, a little deeper move on Aussie yen because the Aussie's got some things going on too. Yeah. Australia does, yeah. Again, no pending order here. That's gone already. So, you're looking at this. You have to wait for this candle to finish. And then you put your pending order here short because of our moving averages. It's really easy to spot these. Again, pending order long right there. This is a pullback candle. We may get 2 or 3. And then by the time we're triggered into this trade, the wick on the candle that triggers us will probably not come back this far. Euro Chef. Again, this looks ugly, but that's a nice range thing going on in there. I won't draw the range now, but you get the premise. All right, these wicks are so long that I'm not really interested in any of this at the moment, so I would just move on to something else. This looks pretty decent for a long entry right above this high here. And remember, we were looking for the next daily candle. Like that. If we don't get triggered into it, no big deal. You can just delete the trade and move on, or place a trade short. We can't straddle here in the U.S. Euro, again, we're all short here. Our pending order would be short right below this candle. Okay. Let all this unfold. Let price come back and kick us in right here. Then pound dollar, again, short pending order right there. Let price come back and turn around and pick us up. So that took about, even with the talk and with the distractions, that took about 20 minutes to cover that number of pairs.
Yeah.
So you don't need to spend an enormous amount of time, and you're doing it at the end of the day. Then what you do is you type in your orders, where you want everything to go. Now, and what I do, and this is just a suggestion, is I open up a Word doc, and let's say my price here right now is 53975. So then over here, I'll write the 1.53975. So when I go to place my order, I only have to copy and paste, because I goof up and cross these numbers up all the time, and I keep getting invalid stop loss and take profit and all that, and that will just drive you insane. So what I'll do is I'll put like a price that's near it, and then let me just do an order so you see what I mean. I'll keep that price here, close this, go to new order, and pending, and let's assume a sell stop at 153,241. All right. Oh, you know what I'll do? Let me put this so you can see it. I will copy, paste. You got me?
Yeah.
Then I copy and paste the same number up here. And now I use this and I can fine tune. Or I could just go right in here and hit the one number, the 10 pips apart and all that. because I cross these numbers up so many times, and it just drives you nuts. Drives me nuts. But that's a way to keep it simple. Just grab a price right in here, and then put it in a Word doc, or you could and then you can copy and paste it and make the adjustments that way. It makes life a little bit easier. All right. So don't want to save that. All right. So we ran down all these pairs, and we talked about the basic daily setup. Let me go back to this. We talked about the basic daily setup. You want to have your new candle, and then if you're following the moving average or averages, some people like this. Some people like to use the guppy. Do I have guppies up here? Oh, I got the dots. Well, let me just go to the dots. I don't want to confuse. You know what? Let me just go to it because this is just a blank chart anyway. Let me just throw the guppies in here. Guppies New York Open. What happened?
You got to go to a smaller time frame.
Oh yeah. Oh, the guppies are not there. Wait a minute.
What?
No, I might not have hit it with the guppies.
Oh yeah.
Yeah, I may have hit the wrong one that didn't have the guppies in it. You see, these are guppies. Guppy moving average. It was Darryl Guppy, right?
Yeah.
Yes.
Okay, and as you know,
My
these
brother.
these faster moving averages represent more intraday, and the longer moving averages represent more of the institutions. And what they like to see is when they're all bottled up like this. Well, that's one way of doing it. Okay, but you could certainly do the same thing on your daily with the guppies, and if they all bottle up and everything. All right, and this is from the Dots, Dean Malone, I think it is.
Yeah.
And he's selling this for $500. But if you do the math and look at some of these numbers, you could do this by just taking your opening price. And I just show you a simple example. Usually, you have your buy stop and sell stop are about 10 pips away from your opening price, and then your first buy is about 25 pips away from opening price. Your first sell is about 25 pips from opening price. Then your stop loss for the sell would be that 25 pips plus the 10 that you put initially. So, I mean, you could just do this yourself and save yourself the $500. That's really all they're doing. And then they're having like the previous day has a high, previous day's low. I'm not knocking it. Don't get me wrong. But it's the simplicity of it. It doesn't help you trade better. It just gives you targets. You got me? So I don't want to knock anybody. BW clean. Okay. All right. So any questions on any of this that we touched on? This will be up in the room a bit later. All right. And this is a daily. Oh, and boy, I should have said daily and 4 hour, but I didn't. But everything I said on the daily does apply to the 4 hour also. Okay.
Okay. I have two questions.
Yeah. Go ahead.
Do you personally go in there on the daily and put your pendings in for most pairs that are close to setting up?
Yeah, I used to do that. Yeah. And it was yes.
And the other question is that ever since the Swiss National Bank deal, I haven't touched any Swissy pairs at all.
And I haven't either.
Yeah.
Nor me.
Yeah, I mean, why? There's so much other stuff you could do.
Sure. And besides that, the spreads on them, like the pound Swiss, holy shit. I'm not the spreads, but the what do you call it? The reserve money you need. What's the word?
I can't think of it, but I know what you're talking about. The margin.
Margin, yeah.
Yeah.
Margin requirements, double, triple, that kind of silly stuff.
I've heard that FXCM in the States here is going to increase their margin again.
Lovely.
More fun for us.
Who's the other one that's going to change it?
FXCM. I heard that they were looking. Well, no, that's the only one. The only other one I could think of would probably be Owanda, but I haven't heard anything.
Well, FXCM just did about a week and a half ago. They changed a few of them slightly.
Oh, okay.
But, their margins are already bumped up anyways. So I even had this conversation with them. I go, well, everybody else's margin, like say euro dollar $23, or 2,300. Okay, for
A standard lot, that's just
a standard lot. Well, theirs was is 26. So I called them up and I go, well, what's the deal with that? I mean, it's not 50 to 1. And they go, well, I mean, that way whatever the bullshit they told me. So then I said, well, is that ethical? Because you advertise 50 to 1, but you're not giving 50 to 1. So,
no, nowhere near it.
Yeah.
That
so
is.
anyways, he goes, well, yeah, why wouldn't it be? I go, okay, well.
The truthful answer is, Daryl, because then we won't go bust like Alpari did.
Yeah, I hear
Well, yeah, and now they have another, they have a primary owner kind of to keep happy, so they're trying to, kiss their ass as much as possible too. So, just my opinion.
Yeah, I mean, when a pair does something really bizarre, I just stay away from it. I no longer have that need to let me see if I can wrestle this fucking bear.
Now, I do know a guy that did that when a couple of years ago when the yen went all wonky. He had a pending order always on the pound yen if it went long at the time, and the pending order wouldn't kick in for like 80 or 90 pips, and then he'd adjust it daily, and that was in case they got another runaway market that went up however many it did that time, 1,200 or whatever the hell it was, that he would be on board. So I mean, there might be a trade like that possibility on a Swiss pair. It's kind of hard to say. I mean,
well, at that point for me, that becomes gambling.
Well, yeah.
So that's really a gambler's mentality, because you don't know what it did. You have absolutely no control, no concept of what it's going to do, and you're hoping on the bizarre circumstance to work out on your behalf.
Yeah.
And it's just not, how I would approach it.
Mm-hmm.
I do want to clarify one thing. Someone asked me if I would go and do these on a daily basis, and I used to do them, but I just want to preface this. I still work with my daily loss limit. So if I see 3 trades, let's say I see 6 charts that have something going on, I'll try to narrow it down to the 1 or 2 best looking of the bunch.
Yeah.
And then take my daily loss limit and split it up into the lot size that will still keep me within reason. Now, on these particular trades, or these dailies, my daily loss limit is $500. I should tell you that right off the bat. I forgot to mention that. So that allows me 2 25 pip stops, 4 50 pip stops at a half a lot. You follow me?
Yeah.
Or 400 pip stops at a quarter of a lot.
Yeah.
All right, and that's how you do that. So you still get the energy of trading. You still get that hate to call it a rush, but you're still in the game.
Mm-hmm.
But you're not just taking money and just you're not making it rain at a strip club. All right. So that's how I do that. And again, that's my personal style. I'm not saying you should adopt it for your own, but that's what I do, because the only thing I can control is my risk. Once I hit that button, the gods of Forex take over. And if I haven't sacrificed enough sheep or virgins or something, I'm at their mercy.
Yeah, chickens work better for me. That's all.
Oh, I might have to give that a try. They're on sale this week too.
Yeah. I'm still working on that 7:30 New York trade.
Oh yeah, let me show you.
Big Ben was good today, I tell you.
Yeah, I was just going to say that. Yeah.
On all pairs.
I'm missing
all the major pairs anyway.
Yeah, I'm missing a broker here. Oh wait,
Yeah.
maybe it's on this one.
Yeah, Michael's getting the room ready for me, so I can be up at that hour.
This is not it. I actually set up a couple of shoot. It's probably on the other broker now that I think about it. No, it's not there.
By the way, I don't like kidney pie, Michael.
Oh, all right.
No, it might be on another broker, but I was just going to point that out. I found a couple of other little spots that actually work out quite well too.
Oh, did you?
Yeah, shoot. And I have to re-download one of the brokers. That's what happened. Because I had to close it. There was an indicator in it that was stalling the whole broker.
Mm.
And that was on FXCM again.
Mm-hmm.
Um,
Imagine that.
shoot. Oh well, here's one of the areas here. But this is the one that we had talked about the other day from 7 to 9. This is not the exact one, but your Big Ben is up here.
Yeah,
It's
Big Ben on Euro Dollar was a lovely winner today.
Oh yeah, and this is Euro Dollar, and this is from 2. Let's just throw it up here. From 2 to 3, you said it was, right?
Yeah, yeah.
And that's from 9.
8 till 9.
Well, 2 a.m. here is 9 o'clock
Oh,
on
yeah,
my
yeah,
broker.
all right. Yeah,
Yeah,
2
remember?
a.m.
Yeah,
Yeah.
my broker's kind of off. Indicator list, and let's go back up here, and I'm going to go from 9 to 10 broker
It was a
time.
beautiful trade on Aussie dollar as well.
9 to 10, and that should be 2 to 3. Yeah, right there.
Yeah.
Now,
Yeah, absolutely beautiful. Now let's go back and
Aussie
look at.
dollar, it was beautiful as well. Same trade,
Oh, okay. Let's go look at Aussie dollar. Same thing.
which is the opposite to what you're doing, I know, but
Yeah. Yeah. Oh, Aussie dollar was beautiful. Yeah.
now
Without a doubt.
with this indicator, you're not getting the exact times. You know that, right?
What do you mean the exact times?
Okay, so put your put your mouse over. Oh, you don't have, open the data window. Okay, so put your mouse over the first candle, the opening candle in there. Okay, so that is what time? That's 9 o'clock. So.
And that's what it says at the bottom of the crosshair, 9 o'clock.
Right. Now, if this candle were to have a wick higher or a wick lower, or even the body higher or lower, the box would not include that. Did you know that?
Well, no. This box takes the high and low from the close of that 9 o'clock candle forward.
I have to disagree with that.
So I don't understand what it is you're saying.
Okay, well, if you go back and you find one where that first candle goes higher or lower, maybe go back in history, you'll see
Well,
that
the first candle goes higher or lower than what?
than the rest of the candles.
well, I don't use a box.
Right there.
I just draw it by hand. So
Whoa! You just passed it there. There we go.
Where
See
this
how
one?
yeah, I can see what Daryl's saying. Yeah.
The blue box. The blue box.
The blue box.
Yeah. You wicks outside the box. That's what Daryl's saying.
Now,
Yeah, no. That's because we're starting at the close of this candle. So
No,
this
that's-
high would be the one.
No, because the 9 o'clock candle closes at 9:05.
Right. So we're opening at the open of the 9:05 candle.
Well, I mean, if you want to do it that way, but that's not taking in the first one.
Oh, well, yeah, the way you're talking about, I'd have to set this back to like 8:55 to incorporate this candle. Because
Yes.
at the close of the 9 o'clock candle is when I want to start taking my assessment.
Okay,
So
but
I understand that, but I see what you mean. This would give you the impression that candle is higher actually than the box when it's really not part of the box at all.
okay, well, if you want to do it that way, that's fine. I'm just pointing that out. And also, this is a perfect one because if you look at the last candle in the blue box,
Hmm.
that closes at 10:05. See?
Yeah.
So you're actually it's actually closing after 9 o'clock or 10 o'clock.
Well, it has to because it has to close at 10:05.
Yeah, but it opens at 10 o'clock.
Yeah, it opens at 10, right?
So I mean, this is just like,
You could just shift it to 5 minutes over. That's all.
yeah.
If that works better for
I
you.
want to point that out. And so what I'm doing in the 7:30 New York trade is I'm specifically using different times, so I get only that specific time in a box.
Okay, and what time are you using on the New York? Let's just set it up and take a peek at it while we're here.
So on the New York, I'm using I use 8:30. Excuse me, 7:30 is the start because I know that candle won't be.
So you're doing what, 7:25 to incorporate the 7:30 candle?
No, I'm using 7:30.
So that now what you're doing is that at the end of the 7:30 candle, the box will start measuring the highs and lows.
Correct.
Okay, but that's the same thing I'm doing.
No, okay, but hear me out.
Let me set this up. So it's 7:30, right? So that would be 14:30 to what? What's the other side?
7:55.
7:55. Okay, so we're going to go 14:30 to 17:55. You mean?
Well, whatever you got there.
It's the gray box, right? Yeah. So 14:30, you're saying, right?
Yeah.
And 17:55.
No, 14:55.
Well, it's only a half an hour thing, isn't it?
You're right. It's a half-hour thing. Oh, that's right. Don't change that. That's right. But the next box would be then
14:55.
14:55.
Okay, 14:55. Yeah. So then what you're doing is you're incorporating. That the 14:55 candle closes, and then the 10 o'clock candle will be outside of that box.
Yeah, and so because if the 14:55 candle closes at 10 o'clock or 1500.
Okay.
All right. So now, and here's why, is because after looking over, am I still on here? No, I'm not. Okay, after looking over several charts, I am still on here. Okay, several charts. I found that if I exclude the range included by some of the actual 7:30 candles, okay, that the box usually is a wee bit smaller, making it more likely to hit target.
Oh, I understand exactly what you're saying. That's why I took that other box, and what I wanted to show you, and it's not here, I actually broke it down to like on a 5-minute chart to like it was I think 7:15 to 7:30 or something like that. I broke it down to an even smaller box to grab the trade. So I understand exactly what you're doing.
Yeah.
Because I did the same thing. I did the same thing with the Big Ben too, where I broke it down into a smaller bite. And for Asia, I found a spot. It's just not on this broker, which kind of sucks.
Great. So at this point, the pair that's actually the two pair that actually work the best are the euro dollar and the dollar CAD. Now, in the dollar CAD, it's actually
let's look at euro dollar. Well,
dollar CAD, it's actually turned out that today would have been a loser. Oh, that's right, I didn't mark that down. But yeah, so today would have been a loser on that one and a loser on the euro yen. But the euro CAD would have been a winner.
And you're basing on a one-to-one risk reward?
Well, not truly.
Well, this is dollar CAD 5-minute with your parameters. So what are you doing as far as risk reward? So I understand what you're looking at.
Okay, so this one, the box was 16 pips approximately. So my stop was about a pip and a half higher than the top of the box.
Right.
Okay, so a pip and a half.
And your take profit was?
My entry would be 1 pip below, and the target would be 1 pip less than the box.
So 15 pips.
About 15 pips.
You should have made it. Well, 2.5 pip spread you may not have.
Well, I have ECN, so yeah, it made it no problem.
Oh, okay, good. Yeah, it's tight on this one with a 2.5 pip spread.
That's why, because there's a lot of these that do turn out, and they'll be within a pip or two. Also, another thing that I do is that at about 75% of target, then I'll just go to break even.
Oh, okay. Oh, I get it. You're managing the trade as you go along.
Yeah, and so 4.5 months of the dollar CAD are now at 26 wins and 8 losses.
Yeah, that's not bad at all. You could live off that.
Yeah.
All right. I'll find those other things and we'll go over it tomorrow.
Great. Okay.
Those other spots.
Sorry to take up that extra time.
No, it's worth it. This is what, we're all here to try to make some money and help each other. This is an example of what you mean with this candle's outside the box.
Yeah.
Right. But what I'm saying is at the close of this candle, on the next candle, I want to start counting my spot. So I get what you're saying. And then what I did was, well, actually, how I started was with a naked chart. And let me go to a clean black and white.
Okay, hold on. Before you change that, look at something here. So if I would have taken that 730 candle that's way outside the box, this trade would not have failed. It probably would have been a break even. And this happens over and over again.
Point to the candle you're talking about so I understand.
This one right here.
Why would you take that?
No, what I'm saying is if this was included in the box, if the box top was up here.
Oh, okay.
Then what we're looking at here is
a 20 pip box.
Yeah, 21 pips, and it only made it from there 18, which would have been enough to get me to break even, but I prefer when.
Yeah, when you take the spreads out and all that. So I got it.
Okay.
Well, and what this box marks is the high and low, which I'm much more interested in. You know what I'm saying? And I want to keep this box as tight as possible. Like
Sure.
in this particular area, as an experiment, I would look at what is, it's going to, every time I get a tick, it's going to take it back. But I'd be looking at what time is this? Now, this is from 2 to 3:30, which is what I talked about with, similar to what I had talked about with Mike. I can't change it, but you get the idea. I want to see, wow, what is this? Let me go look at 50 or 60 of these and see what happens there. And then the next ticket will go back. There it is. Okay. And that's what I was looking at. I was looking for these little congestions. So I don't have to change the chart. This is a good example of what I meant. So that's 2 to 3. So I go back to the next day. Oh, my time is not there. So from 2 to 3 is from 9. Oh, 9 to 10. Okay, 9 to 10. Well, no, 9 to 9:35. So I go back to the next day, and I go from 9 to 9:35 would be here, and then this box would be from here to here. It would be smaller. It would be a tighter range, and that's what I was looking at. I was looking for those little pockets. You see, this is the London breakout. That's the New York breakout. They worked perfectly in that particular case. London breakout to the down, New York breakout to the upside. Oh, this might be the one, but I don't see the Asian. I had a box for Asia too. London breakout to the downside, and in one method I want to try is to do a martingale just once. If it comes back and breaks out to the top side, take the martingale the other way. But I have to really run that a bunch of times to see if it makes any sense. But the New York breakout to the downside, London breakout to the upside. See the nice tiny box? New York breakout to the upside, stop loss is well within reach. London breakout to the downside. Again, stop loss is, reasonable. It's only 13 pips, but my stop is 10. So if I do a 1-to-1, here's a fake out. This is where I wanted to do that martingale. You got me?
Yeah, and I actually did look at that too to think, well, if it gets stopped that one, it'll go the other way. But there was too many double stops on that. So
right, that's something that I wanted to look at. But I would only do it once.
Yeah. Anyways, I didn't do a lot of research in that, but just some.
So, um, yeah, you can get better than 60% with this. That's one thing that I like about it. I'm still trying to refine the breakout times and maybe one other condition, one other filter or something. And I was looking at the MACD as a filter, as long as we're, congruent with MACD is one idea. I want to use the simplest indicators and simplest filters possible.
Well, it's based totally on the 1889. I do use that MACD, the 24 something or other, 245218. But, and I like to see that in Confluence, but generally it's not that important. If it is in Confluence and we just did have a break of the MACD above the 0 line, then those are probably a higher percentage win than the others. But
yeah, and keep in mind the idea is to trade the best looking of the bunch of setups.
Yeah.
So if I got 5 or 6 small boxes like this, then I want to go back and say which one has the best looking setup, and that's the one I want to trade. That's when I would need one other filter or one other parameter that I could, use as a confirmation.
And if those moving averages there were the 18 and the 89, I wouldn't take that trade.
Oh, let me go back.
The one you just had up.
This one.
Yeah, because it's going up and down. You see.
Oh no, I would take it on the break of the box with the 18 above the 89. I'd be all over this for that reason. This one I wouldn't take because it's more in no man's land.
Well, that's what I see the other one as too, in no man's land. So I just
okay, but when I break the box, where is price? That's what I want to know. When I break the box, I've got a nice gap between my 18 and my 89. MACD is in agreement.
But I think that's the 8 and the 34 or something, right? 8 and 20.
No, it's the 1889.
Oh, it is. Okay.
Yeah. So I mean that's something that I could look at to say, yeah. Now see, this is kind of a no man's land here.
Sure.
Where the 18 is above the 89, MACD is short. I like to see everything like this. When we break the box right here, what are my conditions? 18 above 89, MACD in confluence. So this one I don't touch, that one I do touch. So that's kind of what I'm looking at. When you run down 10 pairs, you want to find the best looking of the bunch.
The other filter that I put in there is 13 bars. So if price goes for over an hour, as soon as it goes over an hour without breaking either way, I cancel the trade.
That's a good way to look at it. But again, here would be the same thing. When I break the box right here on this candle, okay, well, we do this one. Let's say we're going 1 pip below. It doesn't matter. But my 18 is below my 89 clearly, and MACD is below 0. That one I want.
Great trade.
Same thing here. When I break the box to the upside, my MACD, my 18 is above my 89, my MACD is in confluence. That one I want. So by hand picking the trades, there'll be some days you don't get the London, but you might get the New York, or vice versa. So it's not that I want to take every single trade. You got me?
Mm-hmm.
I just want to take the ones that the best looking of the bunch. You want the pick of the litter. They're all puppies. You see, this one I wouldn't bother with because I'm in that no man's land. All right? Here, by the time I break the box over here, my 18, this one I may not take either.
Yeah.
You see
the only
that?
thing is the MACD did move above there.
Yeah. That's an iffy. But you know what I do? I go look at another pair because there may be another pair that's got the perfect setup.
Yeah. See, I wouldn't take that one either.
Yeah, but you don't want to be scratching your head, when you could just go to another pair and it could have everything set up for you. Like this one's got everything set up.
Yeah.
You follow me? So I'd rather take that. I'll pass on this one because we're in no man's land. So, and I would look just for these. I would look just for A trades. If I'm scanning 15 pairs and I get 3 A trades and they can all give me 10 pips each, gee, I don't need much more than that. You follow what I'm saying? Remember, it's not about taking every single trade. It's about hand-picking the best looking of the bunch. And, that's what I was getting at with the filter. I would like to have one other filter I could throw in there that would keep me on the right side of things. But that's good insight that you brought to it.
Yeah, it's working out well. So
Yeah. Now, how am I seeing your screen? Oh no, that's mine. Where did that come from?
I don't know, dude.
Oh, okay. And we were at that Aussie dollar daily. Where is that? I just want to see where that is at the moment. Aussie dollar. Oh, let me do it this way. And just see what that looks like. Okay, it's making another pin bar coming back down here again, so we don't know. But my, am I in this trade? Yeah, this trade triggered in, right? Yeah, it triggered. So I'm still going to sit with this and see what happens. All right, Aussie dollar daily. I still got the 3 taps at the 74, and the majority of the time that I've seen this, they've all been good. So I'm willing to take this risk to go at it again.
You took what, a 40 pip hit on the previous one?
I thought it was 60. It ended up being 55. So if both of these work out, I'm well underneath my daily loss limit.
Okay.
You got me, and I can still take another shot at it. So that's why it's worth it. I can take 2 more 50 pip shots. So this is worth it, and I get the one. I'm looking good. And if it takes off and goes into to a second 100 level, I can certainly get break even plus some profit. But like I said, a stop out on a good setup should not freeze you from pulling the trigger again. So that's why I'm able to kind of handle these. I keep the money management in control, keep my risk parameters in control, and you can always continue trading. That's what's key to me. So we'll see. I mean, I would take this 100 times in a row when I saw it, because it's played out far too many times for me to ignore it. And if you go back and look over this or any other pair, you see anytime you get the 2 or 3 taps, it's going. You got 5 or 6 taps here. That puppy's going. I have no, there's just too much evidence that it's going to go that way. Is it a guarantee here? Absolutely, positively not. But would I take this again on the next one? I absolutely would. And keep in mind, on my daily loss limit, I'm still only looking at $200. Get me? On a daily chart. So that's how you keep everything in control.
Incidentally, had you put in that order when you wanted to, or when you intended to on the Aussie dollar, you'd still be in your original trade.
Well, yeah, but that's life. Nothing I can do about it. All right, so I'm going to say so long for now, and I'll keep my eye on this, and whatever it does. Like I said, once you hit it, it's up to the Forex gods. But I would take this over and over and over again, because I guarantee you 7 out of 10 of these will be nice moves. And as I mentioned before, just to show you the power of this one candle alone was 100 pips.
Mm-hmm.
All right, so the energy in the market is there without a doubt. All right, I am going to say so long. I've got like a bunch of stuff to get to. This is recorded, and I'll have. Oh wow. Rob was putting something in the thing. I didn't see it. Okay. I will talk to you guys tomorrow.
All right. Thank you, sir.
All right. Be well, guys. Bye-bye. How do I do this?